Tom O'Brien.
Hi folks, Basil Chapman sitting in for Tom O'Brien, the vacationing Tom O'Brien, well-deserved break, and it's my pleasure to be here. Usually I do the Tiger Technicians Hour, 11 o'clock till noon Eastern Time, every day, every market day that is. And I have the opening call as a daily newsletter, a very comprehensive newsletter, goes out every morning. So at about 6:30 I send charts out to my site, and by 8:35 the Traders Corner has gone out, and that's with all our positions and a little summation of everything that I've done, plus individual stocks or indexes that we might be long or short, as well as stocks that or ETFs that I put in every day, just to give parameters on what we're looking at. So the Dow closed up 78. Let's do this one at a time. For those of you the first time seeing my charts, there's a notation on it, letters on them, but you can just look at the charts themselves. This is the daily chart right here. This is the weekly Dow, and this is the monthly. And what's really important about it is that reversal today above the 17,781 9-period moving average, that little black line there, was really important and very strong. It's good action because the technicals, the way I look at it, this is called the MACD, the moving average convergence divergence. Nice strong move to the upside. The stochastic is in the 87% level. I love that. And that means that what happens from here on in is going to impact the weekly chart. And this weekly chart has this big W formation, but took too much time on the right. So it's got a different implication. The implication is that you've gone to a peak C, and in the Chapman wave, you like to look at 4 higher peaks. That's what's really important about it. So that would go to leg D only if it goes above 18,167. That was the high in April. That'll start leg D. And there's a little Brexit thing. You don't even know that there was a Brexit the other day, last week. And the monthly chart still remains on a buy signal, but will only go to a buy mode, meaning I'm expecting 4 higher peaks. If you can see the Dow go above 18,351, the all-time high made last May. All right, now we can do the numbers a lot quicker. S&P, SPX.X, that is the S&P 500. Needs to break above, I didn't give the parameters on the downside. So for the Dow, at this point, going to the 18,000 area will be really good. 18,020 is even better. And the support has to be down at the 17,820 level. I'm talking near term over the next 2 days. The S&P was at 2,099, up 11. The S&P needs to break this downtrend line, because unless it can surmount that and then close nicely above it, it's not going to be able to tackle the high it was on the 2113 level on the 23rd of June, or the most recent April high back on April the 8th of 2120. So far, good action. The technicals are also very strong, and it moves me to say that 282 to 275 should be a very good containment area for any weakness. But if it's able to close tomorrow, not intraday, I want to see it actually close tomorrow above the high that was made on the 1st, above 210871, that'll be really nice action. Leg D starts in the weekly above 212055. Monthly chart still looks very good. Like the Dow, it's in a buy signal, not yet a confirmed buy mode. All right, let's do the QQQs. The QQQs at 108.26 needs to break on a short-term basis above 108.48. Very important to get there. And then the weekly chart improves. This is kind of lagging, like the IWM. Today the Qs were up 85 cents. That's very nice at 108.27. I want to see the 109.80s, the 110s, and I want to see it soon. The laggard has been the IWM, and that IWM at 113.91 up 22 needs a lot of work. It needs to get to the 116s, 117s to show real strength. Gold has been on an absolute tear, but I think it's just in a short term, it's going to be pulling back here, while the interest rate sensitive stocks and interest rates themselves tend to have a little bit of a pullback here. That's the way I'm looking at it. And what's really important is that this is still very strong technically in the price, but the stochastic's only at 78 in the daily. But the weekly chart is bumped into resistance. See this green line here? This is what I call the Chapman wave inside track repellent zone. It needs decisively to get, if gold can get at 1366, if it's able to get into the 1388, 1392 level, that'll be a really important breakout. At this point, I think it's just going to consolidate maybe 25, 35 points down. Could even do more. It could even test the 1330, 1318 area. but so far it's been really strong. So let's go. We've got silver right now. Silver is at made a peak D. It's at 20.17. I think it too could consolidate. Crude oil could have a bit more of a bounce. Bounce today. Doesn't look great, but I don't think it's going to break down just yet. So at 47.36, if it's able to get to the 49s by Friday afternoon, that'll be important. My thinking is it's going to chop around here, make maybe a lower low, a slightly lower low, but I don't think it's going to tank just yet. Tank of gas, as they say. Now let's go to bonds. The TLT Lehman 20-year T-bond fund is at 142.54, up 21 cents. And this is what I'm saying, based on my 120-minute chart, based on a number of factors, I think that is a spectacular move. I don't have time now to do it. Maybe later in the show I'll do it again. I showed the 35-year bull market in T-bonds and a 35-year bear market in yields. But in the meantime, back at the ranch, I think it's a little toppy. It's still, the Japanization of our bond yields is going to continue for quite a while. But I think on a short-term basis, you can start to see them pull back. Yields go a little bit higher. And if I look at the dollar DXY, we've got the dollar. It was holding well. It's kind of stuck in this upper range. If gold does pull back, then gold can, the dollar could, in fact, if the gold pulls back, the dollar could get to the 96.80, 97.20 area. If it does that, that's going to be very important for the monthly chart. But in the meantime, back at the ranch, just do one thing at a time. The weekly chart is what needs to see somewhere in the 97s, and that'll start to strengthen a little bit more. So the key support is at 95.25 for the dollar. And I'm missing one thing here. Oh, EUR USD. That's what I want to look at. And that is the euro-dollar currency pair. It's trying to rally. It's just kind of stuck. That monthly chart looks like it's got the H pattern that goes to an M pattern. I drew it up there. That's the pattern we're looking at. And this weekly chart has this large arch formation. Really important for the euro-dollar currency pair at 1.11 to try to get above 1.112. If it can do that, it'll say, okay, good, a little bit more strength. But at this point, I think the dollar is the currency of choice at this particular point. So that's it. And then the Vix Index, I'm going to add right here because I do a lot of work for my subscribers on the Vix Index. What I said is that the Vix stays in the high 16s, watch out, triple-digit down move. If it starts to break under 16, there could be a reversal that takes the Dow to the high of the day. And thank goodness we got that. And this VIX index is making the pattern I call the Eiffel Tower, straight up and straight down like an uppercase A. So if the VIX starts tomorrow to trade in the 1460s or lower, this market's going much higher. So I think that's covered a bunch of things. And we will be back. Basil Chapman sitting in for the vacationing Tom O'Brien. Dow was up 78. S&P was up 11. I'll be right back after these important messages.